Intel stock is taking a major hit, and if you're an investor or even just watching the chip space, you're probably asking, what is going on? Today, we are breaking down exactly why Intel shares are dropping, what sparked this latest downturn, and what it all means for the future of this semiconductor giant. This is a big one, so let's dive right in. The immediate trigger for today's drop was a surprise announcement during Intel's latest strategic update. The company revealed that it's keeping its networking and communications division. Now, you might be thinking, what's the big deal with that? Well, for months, the market was expecting Intel to sell or spin off this division. The idea was that a sale would bring in a ton of cash, streamline the company's operations, and allow management to pour all their energy into the core business, fixing their manufacturing and catching up in the chip race. So, when Intel suddenly reversed course, it sent a shockwave through the market. Wall Street hates uncertainty, and this sudden U-turn created the impression that management's strategy isn't as solid as they'd like us to believe. When a company is already fighting to rebuild trust, any sign of indecisiveness is a huge red flag for investors. Let's dig a little deeper into why keeping this networking unit spooked the market so much. On the surface, it doesn't sound like a disaster, but investors read between the lines. First, it suggests that Intel probably couldn't find a buyer willing to pay the price they wanted for the division. This could mean the unit isn't as valuable as they thought, which is not a good look. Second, it signals that Intel might be struggling to simplify its complex operations. A key part of their comeback story was about becoming leaner and more focused, and this decision feels like a step in the opposite direction. And third, it puts more pressure on Intel to now turn around a business segment that hasn't exactly been a star performer. They've essentially doubled down on a part of the company that investors wanted them to get rid of. You have to remember the context here. Intel is in the middle of a massive, multi-year, multi-billion-dollar turnaround plan. When you're attempting a comeback of this scale, clarity and consistency are everything. You need to show the market a clear path forward and then stick to it. Any surprise reversal, like this one, tells investors that the internal situation might be more chaotic or unstable than what's being presented publicly. It chips away at the confidence that CEO Pat Gelsinger and his team have been working so hard to build. Of course, this isn't all just happening in an Intel-sized bubble. The entire tech and semiconductor sector is feeling the pressure right now. We've got rising uncertainty about interest rates, stubborn inflation that won't go away, and signs of slowing global economic growth. All of this makes investors nervous, and they start pulling money out of what they see as riskier investments, which often includes high-growth tech stocks. Chipmakers, in particular, are facing a lot of headwinds. Demand forecasts for PCs, servers, and cloud computing have been all over the place. One quarter things look great, the next, there are warnings of a slowdown. So when this broader macro pressure hits the market, companies like Intel, which are already in a vulnerable position trying to regain lost ground, get hit the hardest. They have less of a buffer to absorb the bad news. Today's stock drop really brings a lot of the deeper, long-term worries about Intel right back to the surface. These are the concerns that have been hovering over the company for years. First and foremost is execution risk. Intel's comeback plan is incredibly ambitious. They're trying to fix their manufacturing technology, launch a brand new foundry business to make chips for other companies, and compete head-on with NVIDIA in the booming AI chip market. That is a monumental task. So any sign of instability, any strategic misstep, immediately raises doubts about whether they can actually pull it all off. Then there's the fierce competition. Let's be honest, Intel's rivals are not sitting still. AMD has been eating its lunch in the server and PC markets for years. NVIDIA completely dominates the AI space. And now you have a new wave of powerful, efficient ARM-based chips from companies like Apple and Qualcomm that are changing the game. In this environment, Intel doesn't just need to execute well. They need to execute flawlessly just to keep up, let alone get ahead. We also have to talk about the immense cost pressures. Intel has been making some tough decisions lately, including laying off staff, delaying big factory projects, and tightening its belt across the board. While these moves are probably necessary to manage costs, they also paint a picture of a company under a great deal of financial strain. It highlights just how thin their margin for error really is. And finally, there's the lingering market skepticism. Despite some recent wins and positive announcements, many on Wall Street are still in wait-and-see mode with Intel. They've been burned before by broken promises and delayed products. They're waiting for cold, hard proof that the turnaround is real and sustainable. They want to see consistent revenue growth, improving profit margins, and major customer wins. So, when news hits that feels like a setback, even a relatively small one like this strategy change, the stock reacts violently because it feeds into that existing narrative of doubt. So, what does this all mean for Intel's future? Is this the beginning of another downward spiral? Well, today's drop doesn't signal a total catastrophe, but it's a harsh reminder of just how fragile investor sentiment around Intel still is. The market is giving them very little benefit of the doubt. This stock is on a knife's edge. What the company desperately needs right now is a period of stability, clear communication from management, and most importantly, visible, undeniable progress. Any more surprises or perceived missteps will just keep this roller coaster of volatility going. Looking ahead, here's what serious investors will be watching for like a hawk. First, updates on their manufacturing roadmap. Are they hitting their 5 nodes in 4 years target? Any delays here would be devastating. Second, new customer wins, especially for their AI chips and their new foundry business. They need to prove they can compete with TSMC and NVIDIA. And third, much clearer and more consistent communication from the leadership team. No more surprise reversals. If Intel can deliver on these fronts, then the stock absolutely has room to recover and grow. The long-term potential is still there. But if the stumbles continue, if the execution falters, then investors better buckle up, because this volatility is here to stay. So there you have it. That's the full breakdown of why Intel's stock is tumbling. It's a complex mix of a specific strategic blunder, broader industry pressure, and the resurfacing of old, deep-seated doubts about their comeback story. I hope this analysis was helpful for you. If it was, do me a favor and hit that like button and subscribe for more deep dives into the stocks that matter. Thanks for watching, and I'll see you in the next video.